You don't even have any physical silver in your hand.
No.
Silver's a bunch of electrons in your computer.
Silver didn't have earnings. Like, it's not like Silver is announcing, the Lone Ranger is announcing earnings for Hi-Ho Silver this week. Like, there's none of it.
This podcast contains the arguably witty banter of two friends, Skippy and Doogles, that like to debate about investing. The content is intended to be entertaining and for informational purposes only, not investment advice. You should do your own research and consult a financial professional before using any of the information in this podcast, and especially before investing.
Skippy and Doogles in the place to be. Thank you. Welcome back. We appreciate y'all. We got a few things, quick hits today. And then it's going to be mostly a premium episode. So skippydoogles.supercast.com. That's where you get the premium. We're going to do Inside the Trade for most of today. But to start it off, Skippy's got some quiz. Don't know what it's about. We're going to do silver talk, OpenAI talk. Probably going to mention a couple other little things. The new format we're going to try, investment committee, where you send in your thoughts on research recommendations. And Skippy and I come from our different angles and break that stock down.
Yeah, so the quick FYI there is only send us a stock pick if you're willing to have it just torn to shreds. Mm-hmm. There's basically no chance that we're both going to like the stock. There's like a 98% chance that I'm going to hate the stock.
Mm-hmm.
And
oh, yeah.
So sometimes that constructive criticism is good. This is what we do for each other, and this is what we lean on other friends in the investment community to do when you're putting a lot of money behind a stock pick.
All right, let's dive into this week. Where do you want to start? Quiz?
All right, you know my quizzes are always, I like to find the most ridiculous things. Usually they're sports related. Mm-hmm. This one, there's like basically no chance it's true, but just bear with me. There is a graphic.
Well, that's a terrible way to start anything.
Exactly. It seems true. It's hilarious. Okay. You'll see why. Okay. There's a graphic floating around online that claims to be a state-by-state breakdown of the most popular word used in dating profiles.
Oh.
Right? I'm going to give you a few examples, right?
Okay. Starts with P, ends with is. Okay.
For Colorado, the word is apparently snowboarding. For North Dakota, the word is oil. And for Minnesota, the word is cabin.
Wait, does P. Diddy live in North Dakota?
No, oil as a profession. As in, I work in the oil fields. Apparently, I think in North Dakota, that's a really desirable thing you've got going for you, right?
Okay. In South Dakota, it's baby. In North Dakota, it's oil.
Stop it. Okay, so there are just some incredible words here.
Okay.
We're going to do a state-by-state quiz. I think I'm going to start with my favorite, which is Indiana. What do you think the most popular word in dating profiles in Indiana is?
I'm going to go with tax.
NASCAR, Doogles. NASCAR.
For the Indianapolis 500?
Apparently.
How, are people... Okay, so I've never used the dating apps, right? Never used them, never been a part of them. And I think I would be, in my mind, I'd be terrible at creating a profile. But I'd be much better than it seems like these people are.
NASCAR. Let's try this. I think you're going to struggle with the statement. Let's try.
Let's try one more.
Give you the word.
Try one more.
Tell me the state. Okay.
Okay. Yeah, let's do it.
Okay. So desert.
Nevada.
Nevada's is casino.
Okay, that makes sense. If you'd started with the state there, I probably could have gotten it.
We're going to come back to desert. Desert's a surprising one. Grilling. 2 states.
I'm thinking like Alabama.
Look at you.
Was it? Okay. There we go. Is desert Arizona?
Desert seems like it should be Arizona. Arizona is hike. Desert is surprisingly California, which I guess tells you people in the valley are more on dating profiles than people on the coast. Desert is also New Mexico, which doesn't make any sense to me. If I told you bonfires, what state do you think might?
Romania.
Ohio and Michigan share their love for bonfires.
Bonfire? Okay, this is a bunch of nonsense. What are they? Okay, Cupid? Like what they?
I have no clue. That's why I told you. 4, 5 states all have hunting or hunt as the most popular word. Any guesses there?
Hunt. Wyoming?
No. Oh yeah, you nailed it. Actually, Wyoming. Yes.
How do you say no and you nailed it?
There's a lot going on.
You just refuse to give me like support. I'm alone over here.
West Virginia, Louisiana, Arkansas, and Montana all have some form of involved. Middle America has some farm going on and some oil going on, like Texas and Oklahoma, it's oil. One of the upsets that I bet you were not expecting is that Missouri, the most popular word reference on dating profiles is zoo. I don't know the famous zoo in Missouri, but apparently people really like
The
it.
St. Louis Zoo, I imagine.
Why not the Kansas City Zoo? I mean...
Ooh, that's a whole thing.
Okay, last one. Everyone's turned us off by now. There's a state where, according to this source, amusement is the most popular word referenced on dating profiles.
Pennsylvania.
How did you get that?
Because of Dorney Park and Hershey Park.
What is Dorney Park? I'm about to get educated here.
Well, an amusement park, mostly known for its water rides.
Where is this? It sounds like I need to go to Pennsylvania.
Allentown, Pennsylvania.
I've been to Allentown and I missed Dorney Park?
Apparently. I didn't think anyone knew about Dorney Park, but I just guessed that and it seemed to be right. So there we go.
I can't believe you nailed. Amusement is the funniest word referenced in this map, which I just sent your way. And again, It's probably completely made up, but it makes for great conversation with your loved ones.
This map, I feel like we should make maps like this. Like, to go, if we analyzed all of the analyst reports, and I'm going to name a word, and you give me the stock, and we just kind of make it up, because this is ridiculous. I love this map, though. Look how beautiful this map is.
I mean, you see the states where people like kayaking, the states where people like, it's a fun map.
New York is museum.
I mean, there's a lot of museums in NYC, right?
Yeah, that's one city.
That's where the large majority of the population lives, dude.
Does no one date in Syracuse?
Syracuse is not driving the... This is exactly my point.
Does no one date in Oneida or whatever?
All right, we're switching gears. Something happened last week that is very interesting to me. A lot of the metal markets dropped extremely rapidly, and in some cases... They had the biggest drops in around 80 to 100 years, right?
So metal markets, you're talking about commodities.
Commodities, yes.
Gold, silver, copper,
platinum,
mercury,
etc.
Mercury?
Mercury?
That's probably that was a bad example, but the thermometer market.
Okay. The only reason this is interesting to me is there was this tonal shift in buzz, kind of from the crypto crowd, but from the short-term momentum folks. Because gold and silver had just been nearly exponential for what seems like a few weeks, but certainly start of the year, last couple months. Performance has been off the charts, right?
Yep. Insane.
One of the big crypto providers, I think it's the one that CZ used to own, but the name escapes me at the moment, literally had a tweet from 5 days ago that said you can now trade gold and silver on our platform. Like, that's how exponential this was. And you just saw people throwing money in. I saw another tweet from a friend of a friend who detailed this on Wednesday, that they had sold all the stocks and bonds in their 401k and taken a 100% position in silver. All I'm trying to articulate here is we were in manic times as it relates to these precious metals. There were all sorts of hypotheses about how gold is the true reserve currency, like this is what Bitcoin is meant to be, et cetera, et cetera. So then Friday of last week was down more than 30%. Silver's down more than 30%. Gold is down between 10 and 15%. Platinum's down about 30%. You get the idea, right?
Yep.
Incredibly volatile. There's 2 points I want to make. One is, if our listeners don't know, how does an asset like this drop 30% in a day? Douglas, do you want to fill them in on what's likely happening behind the scenes?
I think you have ideas. I think you should do this.
I mean, my main idea is leverage and mania, speculation, right? When we talk about speculation, we've talked about leveraged ETFs in the past. And leveraged ETFs are scary for all sorts of reasons. One, because they don't actually do what they seem to describe that they're going to do, which if it's like a 2x leverage ETF, you think you'd get double the performance over an extended period of time.
But it's only
based on
daily.
underlying analysis. What?
It's daily.
It's daily. It's really scary. When the stock or asset goes up, you almost never get significantly more performance. And when the stock goes down, you pretty much always get significantly worse performance. So the ProShares Alta Silver ETF, this is just one example, is a 2x silver fund. Friday of last week, it went down as much as 58%. 58% of its value.
Oh my goodness.
Was wiped out. And the reason I gave the preamble is like you can see the mania building, and you could see someone who's maybe an unsophisticated investor who really is treating their investing account like a gambling account, hopping on Robinhood, being like, silver's the hottest thing right now. I saw 3 high-level analyses of why it's going to be great. I'm so convinced that I want twice the exposure. And I hope this didn't happen, but I can pretty much guarantee it would. And that person has 60% of their wealth disappear. You know, like the example I talked about with the person that claimed to cash in their 401k. It's really scary stuff.
I think this is not tied to the commodity thing, but I think there are so many different signs of people looking for the quick buck right now, including that so Microsoft had earnings this week, and Microsoft went down 10% because of their earnings. This is Microsoft. Like there should be a really strong reason that 10% of Microsoft goes on sale, I believe, and not because you didn't appease whatever the masses were looking for at that current point in time. And so for me, I think there are a few signs like this one where you just go, like someone says, this week I need to make a quick buck. This week I need to be 2x leveraged on silver. Come on now, people. Like, stop what you're doing, because I'm about to ruin the image and the style that you're used to.
I think the larger point, it's so funny. We've beaten this to death. It feels like, but the stock market generally is very expensive, historically expensive. If you look at the percentage of stocks trading with a price to sales over 10, you're at like 33% of all stocks, an all-time high. I won't list all the other things that say the market is generally expensive.
Mm-hmm.
The silver talking point is like, it's more of a sanity check for me. I agree with what you're saying about Microsoft, but it's just like, even when mania is happening, you can't sacrifice your core principles for diversification, margin of safety, long-term strategy. That's what is super scary to me. And I think maybe that does tie into the Microsoft point. Like, who saw Microsoft's earnings, which were a mixed bag, had some pros and some cons, and said, oh my goodness, I can't hold one of the world's best companies anymore. I have to sell it this second.
I think that is exactly what you just stated. It's a point. And it's, if you go to the opposite of why you're buying silver or selling silver, like, finish the Mad Lib of silver this week is going to blank, and therefore I need to blank. If you can fill that in, silver didn't do nothing to you. Silver's not doing anything.
You don't even have any physical silver in your hand. Silver's a bunch of electrons in your computer.
Silver didn't have earnings. Like, it's not like silver is announcing, the Lone Ranger is announcing earnings for Hi-Ho Silver this week. Like, there's none of it.
Well, and so this is a really good point. I don't think we've spent much time in the past 5 years talking about commodities, and there's a reason for that. Neither of us are particularly interested in commodities, but you make a great point there. The reason I'm not a gold bug or a silver bug or anything else is, if silver goes down 30% in a day, I don't get to go back to their 10-year cash flows and figure out if that's a good deal or not. I have no freaking clue.
Yeah. No,
it's still just a precious metal where I'm roughly estimating future demand, and I have no idea. Like, if this was, go back to your Microsoft example, Microsoft went down 10-ish%. If Microsoft goes down 30%, you can believe that when I have some free time, I'm going to start doing some analysis on if that's a good deal or not.
Exactly.
With silver, it's not happening. I'm just kind of laughing.
And the leverage, to your point, like the leverage on these commodities that don't have earnings, you can't call it anything but gambling when you bring leverage into it. Because at least if you're not bringing leverage into it, maybe I could see someone having some view. Silver is a weird one. I don't understand silver. I understand more of the commodities that get used on a frequent basis, like uranium. Like if you have a nuclear bet, I could see someone being like, well, I'm going to buy a uranium company or something like that. But silver, you can't be like,
you could talk about copper if you want. I think
you can do copper. Copper's another one.
Similar, yeah.
But with silver, like I'm 2x silver. Like, did you decide to get engaged or something and got cheap? Like, what are you even betting on? I don't get it. Anyway, but it was silver, right? Where the amount that was lost was Bitcoin. It was like the entire market cap of Bitcoin. Wasn't that silver?
I mean, I despise. I'm not going to talk those numbers. I despise when people say, and the market cap lost of gold, silver, of the S&P 500 was X. Because people act like that means something. Let's talk about when people do that with the S&P 500, right? Mm-hmm. People say, oh, $1 trillion was lost. Like, they seem to not understand that that's the present value of future cash flows for 500 companies. It's not as if that money evaporated in thin air. It's the people's estimate of the current value of that collection of stocks projected out over 30 plus years. It seems like nonsensical numbers.
Well, you might tear this apart, but here's why that mattered to me when I saw those kinds of numbers with Bitcoin. It doesn't really matter. However, Bitcoin is such an important part, I'm using quotes here, of the ecosystem right now. And $1.5 trillion could be gone tomorrow. And the more important part of that to me is what you're bringing up around the cash flows of other companies, because there are none for Bitcoin, is that all it would really take was people to go, I actually just don't believe in this anymore. And like Bitcoin's gone. Like the equivalent of $1.5 trillion, which has been built up over the last 16 years and seems massive, could just be gone.
I follow you. I mean, from the point of owning these things that don't produce clear cash flows is a little bit of an act of faith. The same as you have to have faith in a fiat currency to transact it on a daily basis. Exactly. And when you throw a bunch of leverage on top of that, which we know, which certainly appears was happening in the commodities markets, and certainly appears we know is happening in the crypto markets. And to be honest, Doogles, is happening in all markets across the world right now because we're continuing the everything bubble. And listen, there's a lot going on. There was a potential new nomination for the Fed chair and other things, which we won't get into. But when your investment is based on psyche with leverage, it can be so fragile. And then all of a sudden you can talk about, I mean, with silver, people are talking about the biggest crash since 1921. Have I fact-checked it? No, but take it for what it's worth, right? It's one of the largest moves ever simply because some psyche changed and it's all tied up with leverage. It's rather, I hate to say scary, but it should be concerning.
It is. Since you brought it up, I do want to talk about the Fed chair for one moment. And this is really, for me, is just one moment. So Kevin Warsh, is that how you pronounce his name? That just makes me sound like he's washing my laundry. Yeah. But so he was nominated. I know nothing about him. I actually have no take on the Fed chair. However, I saw a tweet from Mark Andreessen that mentioned how Kevin is the only person on Earth right now that is qualified to do the job that needs to be done by the Fed. That's like effectively what this long tweet from Mark Andreessen. Yeah. And I read this and went like, who are you to know this? Not that Mark Andreessen's incredibly smart. He's done a lot in technology. He runs a venture capital fund that's successful. Like all these things. Like it's not about his track record, but like what made you someone that should have anything to say about the qualifications for the Fed chairman coming up? And why did you decide to tweet that? When I read that, there's something that exists in the ecosphere. Yeah, that's a Doogles trademark right there, the ecosphere. There's something that exists in the ecosphere right now. Mark Andreessen has a megaphone around government and interest rate and employment policy.
Whew. Slippery slope. And we can talk about it off pod because I have a front row seat to some of those things happening.
Mm.
I will say that I've just determined if you ever had a dating profile, the most popular word on your dating profile might be Fed Chair, Federal Reserve, Silicon Valley startup ecosystem. You're not getting many dates here, Dave.
Oh, dude, I'm getting swiped. I don't know which direction.
I was going to steer clear of this. I'll tell you, I did research on the guy because I care more about the Fed chairs than your average person. There's one thing I like from the initial bios. I kind of have no clue what he's going to do. He appears
Which is what
to
you want. You actually want that.
Want to reduce the balance sheet, print less money, but also seems to maybe believe at the moment, despite being polar opposed to what he was saying 20 years ago during the great financial crisis. And, like he'd supported Bernanke through some of the bank bailouts and stuff. He also thinks maybe the AI productivity bloom might lead to a short-term rate cut. So, my wife's a lawyer. We talk a lot about Supreme Court judges in the House, right? The only reason that's relevant
we would have the most boring dating profiles.
The only reason that's relevant is because my favorite Supreme Court justices are the ones that you don't automatically know based on the issue that goes in front of them how they're going to vote. Those are the people that I find most interesting in life. Mm-hmm. From afar, and maybe this is wishful thinking on my behalf, I think the new nominee might surprise some people. And it's not just a formulaic, this is what we will do. There's a deep level of thought, and his beliefs may evolve. This is really hopeful, wishful thinking on my behalf, may evolve based on how the complex adaptive system that is the U.S. economy actually works. So that gives me a little bit of hope.
I think the same thing happened with Jerome.
Yes. I mean, Jerome, he got appointed by two different presidents from two different parties. That's a nice start, right? Mm-hmm. And then I think he managed to alienate people on all sides. That's also a nice start. I think all in all, he's done a B+ job. I'm not super dissatisfied with the guy.
It's a hard role. Yeah, and again, my point was, it's not about Kevin. It's just, I looked at this thing from Mark Andreessen and I was like, I don't understand why you are making any comment about this. Who asked you? And it's not because Mark Andreessen's not smart and not capable and all that kind of stuff. It's just we run a venture capital fund. This is a complex adaptive system. Why? I don't care. I just literally don't care what you have to say.
I'm going to teach you the mute button in Twitter, and life's going to get more fun for you.
Oh no, Twitter is such a clusterscape of nonsense these days. I need to unmute more. It's glorious in there.
Okay.
All right.
Reaching to the fishbowl, you sent me some nonsense about NVIDIA and OpenAI falling on tough times. Tell me about this, Doogles.
Tough times. The deal just was supposed to have happened a few months ago. Back in the fall, September, I think it was, we were covering all the different deals that were happening with OpenAI. Everyone had a deal and stocks were exploding. And NVIDIA had a deal with OpenAI where they were going to invest $100 billion. It's a lot of money, and OpenAI needs hundreds of billions of dollars to make anything work. And so it's
their latest projections are at least a few months old. They wanted 1.4 trillion in spend over the next 5 years. Correct? Mm-hmm. It was numbers in the trillions.
Yeah, that's $1,400 billion. They need a lot of hundreds of billions of dollars to make this work. NVIDIA came back recently, just this past week, and said, actually, that $100 billion might be more like tens of billions of dollars because it was not a binding contract. So they might invest tens of billions of dollars now in OpenAI versus the $100 billion that came out there. If you need $1,400 billion, what you also need is none of your $100 billion to become less than that. Just basic mathematics. And I think that's highly concerning for them. For OpenAI specifically, what it does for the industry overall, who knows? Because NVIDIA is still investing, but not to that degree, right? They're investing $2 billion here, $2 billion there, not to that amount. But OpenAI is losing whatever race that they're in right now. I'm not even sure which of the races because they're getting torn apart in multiple sides. But I looked at that and I was like, oh, God, Sam Altman, thought that Jerome Powell had the hardest job. And Sam Altman, through his own efforts, took over that role.
I have I mean, I try to have sympathy for everyone, but I have limited sympathy. This is a function of their own creation.
It is.
Now they're talking about rushing to IPO, and of course they're throwing out massive numbers for what the company should be.
Because they have to. Because they have to.
Exactly. They've completely made their own bed, and it's not good. Anthropic, in the last 2 weeks, has done some of the world's most incredible things. Unless you're a total AI nerd, no one's had a chance to play with it. But my goodness, some of the tools, they built an inventory management spreadsheet for me. I've outsourced all my spreadsheet formatting. I could go on. Like the tool is just incredible. Enterprise spend with Anthropic right now is accelerating, and they look like they're going to be profitable very, very soon. And they picked an entirely different business model, one that appears to work. But that's not really what this conversation is about. The point is, there's ways to take their tools and run exciting businesses that are based on that hypothesis. And OpenAI picked door number 3, which is we will blow through $1 trillion. They didn't have to do that.
Do you want door number 1 or door number 2? Door number 3. Hold on, that wasn't even.
Yeah,
no one
build devices that no one wants. Remember they had like a 9-minute promo video with the old designer from Apple about how they're good. Yeah. It's just lighting money on fire. Okay, when we talk about this specifically, remember when we broke down Oracle? This is also it was in September of last year.
September.
Okay, and the stock was trading. I just have a chart here. Around $230 a share. And then they had their deal with OpenAI, and I don't remember if it was $100 billion or more. But right, they announced this huge deal with OpenAI. The stock went from $230 a share to about $330 a share that day. Any guesses where the stock is trading right now, Douglas?
190.
165.
Wow.
People have wised up to this. Like that time, September, October, OpenAI made all these deals, and AI mania was truly at its peak as it relates to OpenAI.
Mm-hmm.
And now NVIDIA's backing out of the deal, it seems. I mean, these deals weren't really worth the paper they were written on in the first place. It's funny you mentioned Microsoft earlier, because I think the main reason for a 10% pullback after Microsoft earnings is realizing just how much of their backlog is tied to OpenAI, and people starting to do the math that we told them about in October of last year, that any deal where OpenAI is supposed to send you money is probably not something you should count on for your future earnings.
Because they don't have it. Everyone knows that Jared at the corner can't pay you back, and he never does.
Who's Jared?
He's at the corner. But you know what I'm talking about? You know, like that. It's like that friend or person in your life where you go, oh, okay, yeah. I know they're always about to get a job,
right? Like
they're always about to get a job next week. Like,
yeah.
It's kind of like, everyone knows that. That's OpenAI right now. Yep, I know. Yeah, next week. Yeah, I know. It's coming. It's coming next week. Next week doesn't happen 65 times. Jared, pay me my money. $10. Owe me $10.
Cool. Okay, before we shift to inside the trade, which is really going to be inside these stock picks look interesting and might be research recommendations, but that just doesn't sound as good.
You are not head of marketing.
No, that's not a strength of mine. Let me walk you through the details of a couple companies. I sent you this week. I don't know if you did a deep dive, okay? So two of the most revered companies as investments at the moment are Costco and Visa. Would you agree?
No, but I understand. Your general take.
People love their Costco and their Visa.
God, your dating profile is so boring.
Do you have a better example here?
No. Keep going.
Okay.
No.
All right. Costco currently trades at a price to earnings ratio of 51, has a debt to equity ratio of basically 0.3, has return on invested capital of 22%, and a 5-year growth rate of about 10%. Okay. There's some pros, there's some cons in that. Visa has a PE ratio of 32, debt to equity ratio of 0.6, return on invested capital of 35%, incredibly impressive, and a 5-year growth rate of almost 13%. Okay. The reason that's the baseline is that's a very expensive stock, but gosh, is it profitable. Gosh, is the growth incredible. There's a reason people pay 32 times earnings for that.
Yep.
Okay. There's a stock right now that trades at a PE of 18, has a better debt to equity ratio than Visa at 0.6, has a better return on invested capital at 37%, and a better 5-year growth rate at 13.1%. Do you know what stock that is?
No. Oklo?
Adobe.
Really?
Why is Adobe that cheap? That relatively cheap? I'm not claiming that a PE of 18 is cheap.
AI.
Because AI. And everyone is convinced that the company will not exist next year. Those are the type of stocks we're going to talk about on Inside the Trade. Adobe is incredibly interesting right now. I totally get the negative hypothesis. And I'm not even saying that the negative hypothesis is incorrect. I'm just saying when you compare it to someone like Visa, that is incredibly revered in this quality investing community, that people will tell you over and over is easily worth paying 32 times earnings. And then you compare it side by side with Adobe, you go, interesting.
Wow. Should we get into it?
We should get into it. So for non-premium listeners, thanks for hanging out with us. Everyone else, hang out for some more content coming your way.
Thank you.